market update. Again, my name is K Kim with the Traders Club. I hope you guys had a good week trading this week. I was out of town whole week since last Thursday. I was in New York City for the weekend last weekend, and that I was LA this week. Came back in town here in Minneapolis Thursday late evening. Yesterday I had some business to take care of since I was gone for a while, and so I was able to rest this Saturday, and it's actually evening time, and I just finished about 2 hours video for my members, and now going into the market update video for you guys. And so we did see about 10% of decline since the new all-time high at 293-ish back in September, so we'll talk about that. We'll go from there. Today we'll do spider, Qs, IWM, and Semiconductor. Somebody requested me to do the semi, so we'll look at that. We'll look at those four tickers today. We'll call it a day. Let's start with the spider here. Obviously, I found a couple long-term support levels here as a reference point. You can see that this level right here going into this right there and there and there. We are currently hitting that level, and we also have this rising pivot, I call it, right? Because this was a resistance prior to, and then became a support, and then we're at that vicinity as well. So actually also threw a Fibonacci here. There's a reason why I put it here is because this was a start of that bullish run after that 2015 and 2016 commotion, right? The whole world thought that we're going to get into a financial market meltdown globally, right? That was 2015 and 16. Plus, Trump getting into the office. Well, they were so sure that the crash was going to happen. So that was right here. That's when the move began. So from that point on, all the way to the recent peak, which is 293-ish. And then you can see that how we kind of were pulling back to the first level of Fib, and we found support at 50% in last March and February, which kind of reminds me a lot of right here, because you can see since the 2009 crash, this was the start of the run, and you can see we saw these few pullbacks. So if you analyze here to here and through a Fibonacci here, you can see that that's the first level, which is a 50% Fibonacci. And then this was actually 25% correction. I want to talk about it. Actually, 2011 action, 2015 action, and 2018 current action, there's some similarity, even though there was so much more correction in 2011. So we're going to talk about it in a little bit, but you can see 50% retracement there, and then a first level of retrace, which is actually 38.2. Just don't worry about the numbers here, but 38.2% there. And then that's how the market kind of continued on and continued in the bull market. And ever since these pullbacks, you saw that how market was a little bit more smoother. You notice that we didn't see like a 11% decline, even though everybody was whiny and just this was known as the most hated bull market here, even though this condition was so much better than these two. Obviously, coming from that, that financial market meltdown here in 2009, obviously there was a lot of fear here and here, but ever since these two pullbacks, things were much more smoother, regardless of what the most were thinking back then. So I think kind of a similar levels are retesting, looking at the Fibonacci, and also obviously you can see some support here. But what I wanted to look at is a daily oscillator. Made a note there so I don't forget. Let's go to daily oscillator. This is S&P daily oscillator. If I just actually zoom out, you can see that this 2009 crash, and there were two occurrences where you see my oscillator here gets into extremely oversold. This is a daily chart, guys. Extremely oversold. One time was 2011. Remember we just talked about it, and another time was 2015, right? So 2011, 2015. Well, 2011, this was actually 25% corrections, and this was actually 11% corrections. This is currently about 10% corrections, and it feels like we're in like 15-20% corrections, right? Obviously, this indicator which is RSI, is giving us that implication where it feels like we're in the steep correction. But here's the thing about it though, is that we're actually in a different environment. Let me explain to you why. Because obviously this week got into what? About 8 months of a topping pattern. That's what you call, you know, the classic head and shoulder formation, triple top or head and shoulder, whatever it is, that was a topping pattern, perfectly playing out. And this was actually a very, very vulnerable look because everybody remember how the market crashed in 2008 because we saw the triple top head and shoulder formation in 2008. So to see exact same pattern happening in 2011, well, everybody's freaking out, right? Because, oh my God, that's what we saw. I specifically remember somebody, I forgot his name, he came on TV or something like that, and he said that S&P was going to 600, which means 60 on Spider. Right? So this was when the S&P was trading at like 150 or something like that, or Spider was trading at 150, S&P was trading at 1500. He said that this was right there. This was right in the mid, maybe even at the lows of this correction when this thing hit that. I remember this person saying, I think I blogged about it or something. I don't know. I forgot. But this person said that we're going to 600 on the S&P 500. Spider is going to 60, right? Well, we didn't get 60. We went to completely opposite direction. No wonder why I don't give respect to any so-called experts or gurus. If you've been following me long enough, you know that by now. But anyhow, so you can see that we got an extremely oversold condition. But keep in mind, though, this was after about 8 months of a topping pattern, right? Very similar to 2008. Again, we had the topping pattern. And then we saw a correction, 25% correction after the topping pattern. So the whole process really took nearly like a year or so for that to happen. What happened in 2015 is the same thing. We actually moved sideways for about almost like a year. Close to a year, my 8-9 months, that move right there. 8-9 months moving sideways, and then boom, we saw that 15% corrections right here. Again, dire situation. Just like 2011, 2015, and 16, people are calling some crazy stuff, right? This was when globally, there's so much fear in a global financial markets, right? This was when every single person, quote-unquote experts, was calling for at least 25 to 30% crash. You guys remember that? You couldn't find any YouTube videos back in 2015 and 16, any bullish thesis except mine. That's, I mean, as far as I can tell, right? But anyhow, that's when we saw RSI getting to extremely oversold condition, which is about 1690 at my setting, right? Well, interestingly, we hit that level again. Just a couple days or something like that. We hit that level again here today. But today, we're not like 2015 or 2011. We didn't have 8 months of triple top or topping pattern. We didn't have 8-9 months of sideways move and then just completely losing it. We actually pulled back 11% correction back in early 2018 this year. And then we actually consolidated base for about 6 months. And then we got up and made a new all-time high, which means we cultivated what? Higher high before pulling back. It is completely different sentiment. Well, if this doesn't convince you, let me show you a different chart right here. This is what I call sentiment chart. This is S&P 500 index. And this is obviously just looking at removing all the price action. You're only currently looking at the long-term moving averages alone. Remove all the price action. You can see 2011-12 definitely looks like kind of a rolling over scenario. I mean, we saw that in 2008, rolling over scenario. And so obviously when you start to see a little bit of purple there concerning signal back in 2011, same thing happened in 2016, 15, you start to see this little bit of rollover look to it. But man, when you look at it today, how come we do not see anything similar to that? Keep in mind, if you actually go back to that daily, this oscillator is suggesting that we have the selling pressure similar to 2011 and 2015. But when we go to sentiment chart that I've just showed you, the sentiment chart suggests that we're much more in a bullish sentiment or bullish environment today, right? Also keep in mind though, you know, technically, let's go back here. Technically, oops, I just moved my, there. Technically, we have to still give benefit of the doubt to the buyers because we are still technically in the vicinity of higher low. I can't say this is the bottom yet. We'll talk about the candle in a little bit. We're going to do the candlestick analysis as well today. But you can say that we're technically in the vicinity of higher low, not to mention we've already cultivated higher high here. So for now, and that looks a lot like, I mean, can you imagine what people were saying back in, you know, 2012 October, right? We saw that higher up move. We saw that pullback. I bet that was about what? I bet that was about 10%. Yes, that's 10%, right? And this was about what? 9% or so, right? So it's a pretty similar scenario as what's happening today, this year, earlier this year and late last year, right? So we pulled back about 10%. We managed to gap back up, made a new all-time high, and then we pulled back again. A lot of people argue, well, you know, you can see that we broke these lows, broke these levels. Well, we're below the 200 SMA. But keep in mind, this is where you can see that we're still in the vicinity of higher low here. And I think a lot of people were probably calling for some kind of crash here. There's always fearful people. There's always somebody somewhere calling for that, right? So as far as a sentiment is concerned, this isn't something that we have not seen in the past. We see this kind of pullbacks in an uptrend. You do see abrupt sell-offs, right? And that's just part of the game. I mean, sometimes you are able to avoid certain pullbacks, sometimes you cannot. And this is a part of the game. When you're trading the market, you will get hit with the volatilities. I mean, you cannot avoid it. You know what I mean? There's so many people always cry and whine about it. You know what I mean? But that's sometimes the game that you're playing, that sometimes you get these abrupt sell-offs. This is a reason why. And we were not oversold. We were not overbought at all because we had built a pretty nice base and then we just broken out of that. So we were not overbought at all. Not like 2017. 2017 was way overbought. I was very bearish up here, and I was buying the VIX calls here, and then I was buying flip and buying the dips here. Here, I thought that there was going to be a little bit more short-term bearish implications, but I didn't expect this to come down this low. But that's you know what I mean. That's the market, guys. The market sometimes do and perform unexpected events, and what makes you as a trader, good trader, is how are you going to deal with this, right? If you follow anybody out there on Twitter and stuff, right now, all these gurus, quote unquote, are bearish, right? The fun is that they just flip bearish like down here somewhere. They just flip bearish down here. We're only 5 points away, which it can get all recover in just a couple days. You see what I'm saying? These same gurus were calling it, what's wrong with the all-time highs? That's what they said. Oh, I'm raising cash. That's what they said here. And they said warning signals here. So when they start going bearish, you know what that means. But anyway, so let's actually look at the candlesticks here. I promise you we're going to look at candlesticks too. So candlesticks, obviously, you can see they've got a long, this is what we call long high wave spinning top, or doji, right? You can see that we got long wick at the top and long wick at the bottom. You got a little tiny body there. So that candle looks a lot like maybe this candle right here. See that candle right here, right? That's a high wave spinning top or doji, or long high wave doji there, or that one right here as well. So those are similar candles. And obviously in every candlestick analysis, you need confirmation. So if we do see a gap up or bullish move that covers prior days, which is Friday's high, which is that, and clears above it and closes above it, we can say that we have a formation of Morningstar bullish reversal. But we need to see evidence of that first. So a lot of times when you see a move this fast coming down like this, and then you see a long high wave spinning top or doji, it could implicate some kind of a bottoming candle. but that needs to be confirmed, which we will need to find out in the next couple of days. So we'll go from there. Let's go to Qs. Qs, there's this support right here. I just drawn from here to there. Obviously, we're still in the vicinity of higher lows. So we're looking at this here. This is a level we're holding. We're slightly undercut it below the 200 SMA, but what I wanted to tell you guys or show you guys is a weekly oscillator. So if you go to weekly oscillator here, you can see that with a long base, broke out of that base back in 2012, but ever since it broke out of the base, this is a weekly chart, by the way, Qs. We'll see these pullbacks. You can see that it doesn't go straight up. It goes up and down, up and down. Even back in 2016, when we saw that decline way below the 50, I think there's a 50 on the weekly. That's kind of where we at here. That we saw same thing in 2012. We also saw the same thing in 2011. When we talked about 2011, 12, 15 in S&P, well, same thing is happening on the Qs here. So we're retesting these historical lows that has been acted as a pretty strong support in the past. But also keep that in mind, 2015 and 16 was such a more dire situation than today. But regardless of that, we are retesting that vicinity where we found support back in 2011, 12, and 15 and 16, and here we are today. And we're kind of retesting this level here, and we're still in the vicinity of higher lows. So at this point, I want to continue to give benefit of the doubt to the buyers in the primary term. Obviously, in the minor term and the short term, we are bearish. I mean, we are seeing 50, 20, and 10 EMA kind of rolling over here. But in the longer term, though, in the medium term, maybe neutral, because it might still see some volatility. It may take some time to find some reversal or something like that. But in a primary term, I do want to give benefit of the doubt to the buyers on the Nasdaq as well. On the Russell 2000, we did see, I think, most steep decline on the on the small caps here. Small caps, we are finding support here, right? This is a rising pivot. Excuse me. So we got the prior resistance, new support, or prior resistance, prior support, potentially a new support. We don't know yet. We don't know that yet, but we are retesting that rising pivot there. This is a prior low though. This is a prior resistance level. You can see that prior resistance, prior support is a congestion zone there. And anytime when you see abrupt sell-off like this, you can see that's abrupt sell-off, abrupt sell-off, abrupt sell-off, abrupt sell-off, and that's abrupt sell-off. See, what I'm really scared about the market is a bear market. When the market get into a bear market, when the market get into a recession, because that recession could take year and a year, half, sometimes even 2 years before it can recover. But a lot of times these quick, fast down move can meet with also quick and fast up move. It can recover in a month or two. And so let's actually go to monthly chart here. I'm going to show you guys monthly on the small caps here. So when you go to monthly, you can see that we're retesting, what is that? Prior, this again, rising pivot. This is monthly chart, guys. Prior resistance, new support. A lot of times what happens is when either stock or in the index breaks out of this resistance, it likes to come back and retest before getting back up. And I think the biggest example of that price action is the Dow Jones Industrial Average here. Let me show you. And this is one of my biggest reasons why. I mean, if you go check my video that I've done back in 2016, Dow's historical breakout. I'll put that video at the end of this video so you can check it out now. This was what I was talking about. And this was back in 2016, guys. So this was when the market was doing this right here. This was when the market was doing that, right? So if you go check out my video back in 2000, I think this was right here, actually, second time, right here. If you check out my video back in 2016, I talked about, again, this is 2016 here, you can see, 2016, yeah? So you can see that this is prior resistance, this is a new support, right? So Dow Jones has been kind of bound by this for for a decade, right? You can see that since 2000, it was not able to, you know, some people call this a megaphone pattern, whatever it is. It's been bound by this here, this resistance. And then finally Dow broke out. What does it do? It inevitably came down and retested level. And you can see it actually slightly went lower. So then there are a lot of dip buyers coming in, buying the Dows there. And then it propped it up. And then once we found support, you know what happened to the Dow, right? You can see what happened. This is a prior resistance acting as new support. So, I mean, that's kind of, that's exactly what's happening here in the Russell 2000. I have to say this is very, very constructive in the long run because, you know, we had a very, very nice move here. And this kind of pullback is healthy. I mean, you saw it here. We pull back and then boom. Pull back and then boom, right? And what baffles me isn't that, wouldn't you make more money trying to go long somewhere here and trying to get this run instead of trying to somehow, you know, take a little bit of that pullback? Because it is almost impossible to know where the pullback level is. I mean, most people who went bearish on these indices are not at the top. People who actually went short at the top is they've been trying to short from all the way up here, down here. So they've been losing pretty much last couple of years. But most people probably went short maybe 155 or something like that in the Russell 2000. And they're just a couple points, you know, away. So what I'm saying is it is much better to look at things in a longer term and trying to catch that long-term movement, which is trying to catch after this abrupt sell-off, trying to catch this, abrupt sell-off, trying to catch that, right? Which I've been buying Russell 2000 from here. And all the way here, I was just buying this. You guys remember in 2017, I was just buying this all the way through. And one of the reasons was this too, because we're just retesting it really sharply here, just right on that line, prior resistance, new support. We got up and we're retesting it, right? Very, very similar to how Dow Jones did that in 2016. One last one, I'll let you guys go to Semiconductor. Well, Semiconductor is breaking lower, breaking down out of this 8 months consolidation type of deal. We just talked about this on the S&P. We talked about how 2012 we had an 8-month topping pattern or reversal pattern, right? And then 2015 it was consolidating for 8-9 months or something like that. Before 15% corrections, Semiconductor, it is now kind of following similar setup here where it just kind of consolidated for about almost a year, about 10-11 months. We're finally breaking lower. I have to say that this could be a warning signal if we see other indices doing the same thing. But it is not the case. We're only seeing Semiconductor doing it. Every other indices made new all-time high and it was just got abrupt sell-off. Only semis are doing this kind of a consolidation and then pulling back, right? It would be kind of a warning signal. It will be cautionary signal if we see all the major indices doing this. Like, you know, they're building this, you know, topping pattern or major reversal pattern and then breaking lower. So what I did was I did a major Fibonacci here, and we're retesting the first level. I think the worst case scenario may be 79, but I think we're going to find support here because last times we did the same thing here. If you can see here, you can see we saw something similar here. And if I do go here to there, from this low, right, that low, and it went up, you can see that it came down to that level or in between the first and the second level there. And before it heading back up. I remember how a lot of people were very, very bearish on the Semiconductor back in 2015 and 16. I actually done a video back in 2015 and 16 why I thought the semis are going to lead the entire market. But anyway, so it never really saw that correction or crash. We actually held the support here. And I guess you can argue that today, though, Semiconductor did not hold that. Did not hold this neckline, right? This we actually breaking below it. So yeah, so that potentially be the beginning of a bear market. But like I said, I don't think one sector or one index can, you know, completely crash or get in a bear market while other indices kind of trying to float here. So obviously, if other indices starts to fall, Semiconductor is going to be very, very vulnerable. Maybe some people are going to even argue that Semiconductor is going to lead other indices down. I think, as of today, I think the other indices likely lead the semiconductor to the upside here if we can have to stabilize. So I don't, one of the reasons why I don't really look at semiconductor that much is it's not really that accurate to call the major markets health. So I mostly, I do look at it here and there, but so I think if anything, some of these levels are more of a buying opportunity for semiconductor. If not here, then maybe somewhere in that vicinity, I'm thinking there. Let me just look at other indices. Yeah, so when I go to weekly chart also, I'll end the video with this. When I just go to weekly here, you can see same thing here, there, right? Obviously, we did go slightly low in 2008, 2009, but that was part of major crash. Major crash. So but once it started to get up here in 2011, that's where we hit. And 2015, that's where it was. And then 2018, that's where we're at. Doesn't mean it has a bounce there, but that was historical level where we did see some buyers in that vicinity on the semis there. So that's everything for me. You guys have a wonderful weekend, and good luck trading next week.